Hi everyone, you're welcome back to a new video on DXY. This is going to be one of the shortest videos on my channel simply because this is a follow-up review from Sunday's price action, Sunday's video on the YouTube. If you want to check that out, you go to the previous posts, DXY, GBP and T-bonds. You see the video there, you watch it, and this video would actually make more sense to you. So going forward, that being said, what we're looking at right now is the weekly time frame. And like I said in the last call, this is what we refer to as the weekly order block. Okay, so anytime you see a red candle, for instance, let's say you use black and green, which is like a very common color, but this red candle is a sell candle basically. And when price pushes above it, uses the body close above this candle, it becomes an order block. Okay, so where there was a previous area of selling, when price completely closes above it, it serves as an area that can support for higher prices. Okay, so that being said, let's go to the next thing. So we're going to come again. This is the weekly order block, which is supposed to push price higher. So that is where we got our idea for, looking for higher prices. But as much as we started the video from last week with an indecisive price action, we were still able to carve out, trades and setups and basically tell, project a draw, basically a narrative, an idea of where price was more likely to go to. So I'm just going to put my box on this order block so we can, visually see the mean threshold of the order block and how, price is doing a beautiful job at, supporting that level. Okay, the shit is not random. This isn't random. So 50% of this order block is called a mean threshold. So So the mean threshold, that's what we have there. And I'm just going to delete that. So we know that price is coming away from the mean threshold and it's taking out a low basically. So knowing this, let's open our daily time frame so that we can review what we talked about last week on Sunday. So this is the daily time frame and this is what we have. This is that weekly order block, which is a weekly sell candle, and we had a closure above it. So this series of down close candles becomes what? An order block. Now, for some weird reason, why do we have like an imbalance right here? Okay, so this is going to be referred to as an imbalance in this particular space. All right, is an imbalance that exists between this day, which is on the candle of Tuesday, 10th of December 2024. The previous day, the high of the candle did not meets the low of Wednesday's candle. So that creates an imbalance on Tuesday's candle. That is why we have a buy side imbalance, sell side inefficiency right there. So this FVG is going to be referred to as a BC. Okay, so because it's inefficient on sell side, we get this sell right into there, and then we start to rally to where premium. And we talked about it in the price in the last video. So you can go through that and see how it is. Now that we're at this level, I'm going to just mark this out for DXY. Watch how we trade around this level tomorrow. Tomorrow being Friday, so we may not really see that rally. But if we're going to continue with that rally, I want to see this volume imbalance being utilized. Okay, so if you've been following this channel for a while, you see how we use volume imbalances, and it's something I want to be out there. Like this is a very good information. You could use these levels to to foresee an idea or to make sure that this particular narrative that I have in mind for these buyers is playing as it's coming to fruition basically. Because if we have a volume imbalance here, that means this area is void of bodies of candles. Obviously, it's visually seen here. So since we've gotten a market structure shift above this short-term high, okay, and this fair value gap, which is now an inversion fair value gap, is going to be an IFVG because we've completely closed above it. So it's not going to price didn't, it's initially supported for selling, but look what happened after we formed the swing high, shifted above that swing high, and buy side is going to be here, volume imbalance is going to be here, buy side, buy side, buy side eventually. So Yeah, if DXY is going to continue higher, you already know the vibes. Like you already know, you can see it. You can see that from the weekly order block. Look at the kind of price action we're getting from the weekly order block. We're getting a return into an old imbalance, which is the buy side imbalance, sell side inefficiency, right? We're getting a shift above the high from Tuesday, which is the high that was initially the high of the week when this week started. Okay, we've gotten that shift and we're targeting price is basically drawing to the high of Wednesday from last week. So everything is piecing together. And last week we compared the price action with ZB, and we're going to be doing that again. So in order to not be confused there, for high probability setups, as long as the T bonds are moving higher, DXY is going to move lower. And as long as DXY is moving lower, the T bond is going to move higher. So in this case, DXY is moving higher, right? We've had the market structure shift. I want to, at least see this high traded into. We're not saying it's going to get here, at least not just yet, but feeling this imbalance, taking out this high, trading potentially to this level because this imbalance, marking it out, right? If you eyeball it, 50% of that is the consequent encroachment. And I'm going to write that now. Consequent encroachment. Okay. So 50% of it is CE. All right. So we have CE at that level, we have buy side at that level. So this area is very, very key for price to rally above. Now that we know DXY is, we're leaning towards higher prices for ZB. What are you going to take with that? You want to see lower prices for ZB. Okay, let's just type it in ZB and see lower prices. You just treasury bonds and see lower prices basically. And look at where we are. Look at where we are right now on the daily time frame. Okay, so if this is going to return, this imbalance is an active drawn liquidity. If DXY is going to continue higher, then we can get a short-term move lower on T-bonds. That makes sense. So yeah, I don't want to make, I promise this video was going to be very short because it's a review video, so it's not supposed to be long. But yeah, I wanted to also give it, a shout out to myself for being able to do this in spite of my busy schedule, like being able to make this video. So thank you everyone for sticking around. If you're watching, showing up, I really appreciate you for the views, for kicking it in, for pouring time into yourself, for investing into yourself, because that's what we do. And the moment you begin to get this experience, trading is going to be much easier for you. You begin to have and find an approach, and it's the approach that makes you profitable, nothing else. So my goal on this my YouTube channel is to keep anyone who is following to be able to know that this stuff is repeatable. So there's no reason to fear. There's no reason to worry. All you have to do is compare price actions, do your intermarket relationships, do intramarket relationships, and trade, pick an asset class, for example, AED USD, S&P 500, GBP USD, and then trade it. Okay, knowing fully well that once you can find a great deal, a draw on liquidity for DXY, the opposite can be found in foreign assets like Aussie, GBP, Euro, and the likes of them. So thank you very much all for showing up for this. Really appreciate and see you in the next video. Bye.